Good afternoon to you, a Friday afternoon no less. It's great to be here with you on the call. You know the drill, 10 stocks picked by you, 2 expert guests, all in 1 hour. And if you don't know the drill, perhaps you're watching us via Twitter or Facebook or YouTube as well. Big welcome to you. We do this program every day between 12 and 1 p.m., Monday to Friday at least. I'm Nadine Blaney. Okay, let's get to it. Our expert guests today, we have Jun Bei Liu from Tribeca Investment Partners and Adam Dawes from Shaw & Partners. Jun Bei, good afternoon to you both. But Jun Bei, what do you make of this week overall? Bit of the wobbles, to say the least, in terms of equities at an index level, but are you still seeing strength being displayed in a lot of the companies you hold?
Oh, look, absolutely. We have had a few days of profit taking. You know, that is after very strong performance at the index level for many months. And, you know, coming out of what was quite a solid reporting season, there was a bit of profit taking behavior, a bit of money putting into, you know, some of the resource names where they really lagged in the last month during the reporting season because of the risk of selling, you know, the worry about the global growth. So far this week, we're seeing, you know, today is actually people stepping back in, buying some of the dips for those stocks. So whether it's growth, whether it's value, there seems to be, you know, quite a lot of money put back into work today after just a few days of really just profit taking.
Yeah. Adam, is that your take on it, that people are still quite willing to buy the dip?
Yes and no. So seasonally, September is or generally it is a weak month. And I think that's going to be some of the issues that we've got coming through into sort of midway through September and a little bit longer. Also, we've had reporting season, as Jun Bei correctly pointed out, that reporting season now has finished and mostly all of those dividends have been paid. So you've got this issue where August, you know, we've got lots of activity, lots of things going on, dividends being paid, and then September is very quiet, and then you've got AGM season in October. So sort of bookended by sort of 2 months of sort of solid information. September generally is a slower month for the ASX, and with less news coming out, everything's been sort of talked about in August. I think that's probably a little bit more seasonality in the market for what's going on at the moment. But yeah, it was a surprise to see it so far down yesterday and maybe just ticked up, getting on closer to the close, and obviously today looking a little better.
All right, well, we'll timestamp this. We're just past noon here in Sydney on a Friday, and we had some big news this morning. It had been well flagged, clearly didn't come as a surprise, but we've got Oil Search and Santos coming to a definitive agreement to merge. It's worth about $8.4 billion. Perhaps not a clear-cut path to approval, though, with Papua New Guinea's government today raising concerns that the takeover could harm its national interest. The Deputy Prime Minister highlighting the potential impact of job losses, lower market liquidity, and the loss of local ownership. But the merger of Santos and Oil Search will create the nation's largest energy play with a combined market cap of over $20 billion and is subject to both shareholder and PNG court approval. So that is, I'm still going to call it, well, let's call it a stock of the day, shall we? Santos, I actually contacted the company. It's not clear if this is going to be called Santos or, you know, they'll come up with some sort of a new name. But for the purposes of today, Santos it is. Adam Dawes, what do you make of it?
Look, first of all, I would say oil companies and energy companies basically need to either get big or go home is pretty much my response. And we've seen Woodside and BHP talk about merger of their oil and gas assets. We're certainly now seeing Santos and Oil Search looking to do the same as well. So, look, it is very much in line with what's going on with this ESG investing and all of the stuff that's going on with these guys. I really think that this is a good merger, probably potentially a better merger for the Oil Search team or the Oil Search shareholders than the Santos shareholders. But I do think that Santos has some good experience in Papua New Guinea, so they'll bring that to the table. And really, Oil Search really needs to get their Alaskan assets up and running as well. And that will be a real positive for them if they've got a little bit of extra capital. They are talking about synergies of merging the two companies between 90 to 115 million pre-tax dollar savings. So I think that's a benefit to both shareholders. But really, it's go big or go home for me on these oil and gas companies at the moment.
Well, yes, because we've seen it with BHP and Woodside. Because, Jun Bei, when you think about these oil and gas plays, in the current environment, with ESG being such a concern, is that the thing? You want to be invested in the big names, the ones that can really leverage from still oil prices, gas prices, and economic growth from here.
Yeah, look, I missed part of your questions. My kids must be streaming video. I think my view is that, we have started seeing the M&A activity across all the oil majors around the world. Australia actually is a little bit slow to respond in the merger and, these major deals. In the offshore markets, we've seen it started from last year. So they need scale. And even though at the moment operating environment is looking fantastic for the next 12 to 18 months, the oil price is tracking higher as the world economy reopens, but they certainly need scale. And the investor base certainly is going to shrink, over time with the rise of ESG conscious investing. And that's why BHP had to separating out their assets and merging into with Woodside. So we should continue to see this merger and acquisition around.
Adam, I didn't get it. Was it a buy, hold, or sell for Santos?
Well, I don't know is the honest answer. Look, Santos has always been an interesting company to sort of keep an eye on. I think you'd be best to play Woodside BHP's side of things. So I'm going to say a hold until we get an understanding of really how the deal is actually going to work and get some runs on the board for the newly merged entity. But yeah, for me, I'd probably stay even bigger in the bigger end of town and do Woodside would be my buy in the space if I'm pushed for it at the moment.
Got it. Now, perhaps we can go back to Jun Bei. You were talking about ESG. I'm keen to get the continuation of your thoughts there, Jun Bei.
Sorry, I told my kids to stop streaming videos. So look at ESG, rise of ESG, we'll see more of those, the limited investor base really for these sort of assets, and which does make those assets in the short term very, very attractive. Valuation is not very high for them to merge. It's going to create a lot of value, aside from the synergy even. So, I really like this stock. I like Santos, and I think the merger is going to create a much better business. Actually, quite contrary to Adam, I don't quite like Woodside. I think, the deal is transformational, but the problem for the stock is that there's something technical for the next 12 months, perhaps, because BHP, the whole point for BHP to separating out its oil business is because its investor base is pushing for ESG friendly, type of assets. So, once the transfer, once the merger goes through, BHP will sit there with 49% of the merged company. 49% of the merged company, and then all the shareholders will get a share of that merged entity, and a lot of those shareholders are based in Europe, and they will sell those stock straight away. So you will have a war of selling for Woodside stock, in 6 months' time. So it is going to put pressure on that stock, and relatively it does make Santos and Oil Search look more interesting.
Got it. Jun Bei, it's live television, it's work from home. I can picture children in another room getting very upset with you right now, but it's okay because there are literally lemons being thrown across this ausbiz newsroom, so we're all getting distracted. It feels a little bit like a Friday. Shall we continue on? That is not a buy for Santos from Jun Bei. Let's go to the companies that have been nominated by our viewers. Fang has written in asking about Codan, saying Codan has fallen since the August reporting results. Could I get your thoughts on CDA? Because Codan has been one of those really high-flying, high-performing share prices over the past while. Underlying net profit up 52% on year, 8% beat on some forecasts in the market, continuing to invest its manufacturing capacity. Was it, Jun Bei, the lack of guidance, perhaps?
Look, it's lack of guidance. Also, there's a sort of recognition of the company has done very well. The operating environment was incredible for the business to see the growth of 40%. And going forward, that growth is going to slow down. Still going to grow at teens, sort of 14%, 15%, but it is a step down from what it was. So the market during this reporting season particularly is really focused on what's going to happen, which company is going to actually do better in a reopening sort of economy. So this business does it's going to grow slower. It's not particularly expensive for a growth stock. It's trading on 26 times, growing at mid-teens, which is pretty good valuation. It's just that it's coming off such a big growth number, and people a little bit needs a bit more confidence whether they're getting a bit more new contracts, for a market to really get excited about it. But regardless, look at the share chart. It's done incredibly well. It's just going through a bit of a profit taking and transition in register.
If you were already an owner of Codan, would you hold on to it, Jun Bei?
Oh, I would hold on to it. Absolutely. It's a hold for me.
What do you think about Codan, Adam? Because, I suppose a lot of the growth is priced in, right?
Yeah, absolutely. And I agree with Jun Bei. It's definitely a hold from me as well. A couple of things that I did pick up and potentially why the share price has fallen. There has been some significant investment in manufacturing inventory and in the engineering divisions. They're looking to double that sort of manufacturing capacity to around about 66 million, which means they're going to have to put a fair bit of money into that sort of capex side of things. They did say that they're going to have some strong cash generations, which I think is a positive, but also a long-standing managing director, Donald McGurk, has advised that the board is of his intention to retire in the next sort of 9 to 12 months. Potentially there's a little bit of a change in the helm there, or at the start of the ship. So, potentially there might be some of the people in the market getting a little bit nervous about who the new MD will be and how that's going to affect the stock. So potentially just de-risking the portfolios a little bit.
Okay, but it is a hold. Fang, I hope that helps you. On to the next, coming from Charlotte. This is Eclipx Group. ECX is the ticker code, excuse me. Look, we know what's been happening with the price of used cars. We've got pretty strong results coming through, particularly with the end of lease income, and there was a $20 million buyback. So things have been going pretty well through this pandemic for Eclipx Group. But the question, Jun Bei, of course, is can it continue?
Yeah, certainly look like the used car prices isn't going to come off anytime soon. From everywhere of what we heard is that the new car supply is going to be very challenging, and especially becoming worse in the next couple of weeks, just because of all the shortages, whether it's whether it's shipping. So that is creating a lot of issue for the new car. So we expect the used car to remain very strong, and this company's earning is going to be very leveraged to it. I agree we shouldn't be capitalizing on what is a one-off type of cash flow, but regardless, the company is going to benefit from it for at least 12 months or so. It's not expensive. It's trading on less than 10 times. Obviously on the good earnings, but economy hasn't really fully reopened. So this one does have a bit of benefit when the businesses does move on to increase some of those some of those things. So it is well positioned. Operating conditions very strong. Also, it's got a sort of M&A appeal as well. So on that basis, I think it's a buy.
A buy for Eclipx Group. Would you be buying Eclipx Group, Adam? Because to Jun Bei's point, there's been a long-term thinking that it could also be a player in consolidation in the industry.
Yeah, definitely. I'm going to go with Jun Bei on this one. We're going to put it in as a buy because I basically look at the sort of the chart side of things as well. And if you go back to that chart, that trend line is uninterrupted since I think around August or even longer. There you go, that trend line from sort of October, November last year. And it's just been really nicely moving in that channel. It is at the bottom end of that channel range at the moment, so that gives me a little bit more confidence to start picking that up. But also, used car prices are going to remain elevated. We understand that. But however, the other side of it is that new cars are going to continue to suffer because of all of this semiconductor shortage that's happening in China and around the world. Now, most cars these days are computers on wheels. And basically, that semiconductor issue is going to flow through into new cars. So I feel that new cars will continue to be limited on their overall buying, or they won't be as much demand, there's demand but less supply. And that will then keep the used car market very, very stable for the next 2 to 3 years. So yeah, Eclipx is a buy.
Should we call it a day and go home then, folks? Because we've got one in the ausbiz fantasy portfolio. All right. Yay. So I feel good about this. It's all smooth sailing from here on in. Let's talk then about Imdex, IMD. This is for Clarissa. Clarissa, thanks for writing in. Don't forget, this is information. It's not financial advice particular to your own circumstances, so you do have to keep that in mind. Okay, so I don't know a lot about Imdex, IMD. Adam, maybe you can give us a bit of a 101 and then tell us your view.
Yeah, absolutely. So Imdex provides drilling products, sensors for the minerals industry going forward, including sort of drill fluids, solid removals. I mean, there's a long list of what they do, but basically drilling services going forward. Look, IMD has certainly had some very good industry conditions, and those industry conditions do remain favourable. So basically, that says to me that obviously commodity prices are moving, or have started to pull off a little bit, but they have been moving higher over the year. And so all mining services companies should do very well in a higher commodity environment. But the problem is that we haven't seen that. We haven't seen that flow through, and you can look at the likes of Monadelphous, Emeco, Austin Engineering, and they've all done, or they haven't done so well. This one is the only one that I've seen that has had that sort of positive chart movement. But basically, I feel that the demand for drilling services is going to remain strong. We expect a pickup in the base metal exploration, and certainly in copper and gold. But that will really depend on how the commodity price is going. The thing that I think that has been a real issue for a lot of these mining services companies is the cost of getting a body to work it. So in other words, the cost of that employee has gone absolutely parabolic or sky high. And that's going to really affect these guys' bottom line going forward as well. But look, the downside risk to this one is obviously that material downturn in the commodity prices, as well as COVID-19 disruptions to their operations in their key areas, which is Australia and North America. I'd be cautious on this one. I don't really like a lot of the mining services businesses. So this is a hold from me, because I don't see that wage pressure going anywhere but going higher. And I think that will be an issue for all mining services companies in Australia. So it's a hold from me, Nadine.
Yeah, I think that might come up a little bit later in the piece. Jun Bei, I know that it's the small end of the market regardless, but do you have anything else to add about IMD and how you'd view the company going forward and the risks that it faces?
Yeah, first let me say I agree with Adam, it's a hold. And so the thing with IMD is that it's almost a little bit like a tech company for the mining services industry. It sells a lot of technology businesses, sort of technology enhancement, help those businesses. So in the last 12 months or last 6 months, we have seen very strong demand for mining services, and but the problems being that the labor shortage and all of that has created margin crunch for the mining services companies such as Monadelphous and all of that. So the operating condition has been tough because of the shortage to the cost front, whereas Imdex is less impacted because they're really selling the technology into what is a very strong demand environment. So they have done well. But now I look at this company used to trade at sort of low double-digit type of multiple, like what mining services companies used to trade on. Now it trades close to 20. I understand it's cheaper than technology businesses, but it certainly seems quite expensive relative to to what its more traditional peers are trading on. So it is pricey. It is growing. Environment's good. I would just hold on to it. I probably wouldn't be rushing out to buy it today.
Got it. Thank you. That's Imdex for you, Clarissa. On to PPK Group for, okay, that was Clarissa. This is Kendall. Investing in boron nitrate nanotubes, also known as BNNT, commercialization of high-performance batteries, ballistic armor for commercial and military use. Boy, this is interesting. So it's a fiber that's 100 times stronger than steel, but as light as carbon fiber, I should say. Jun Bei, this sounds, super high tech. It sounds very future focused. It's got a few key words in there, batteries being one of them. What do you make of it?
Oh, it looked fantastic. Look, the share price, they've got every possible every possible keyword in what they do. Look, I think it's a little bit more speculative for me. It's certainly in the right place. It certainly come across as one of those stocks that does have a lot of hot money in there. I'll probably just watch and see where the execution comes from.
Yeah. What do you think, Adam? Because again, I think I read that the share price is up. Well, exponentially. Look at the chart that's on screen right now.
Yeah, it's up 7% today, even up $1.40. So yeah, going crazy.
But I mean, the fact that we sort of all have to still look up what it does and scratch our head a little bit and say, okay, massive markets, EV, drones, cell phones, anything that requires greater battery life, it all sounds really good. But do you want to be invested in that company yet?
Well, maybe you should have been invested into it about maybe 3 months ago, because look, the stock has absolutely gone parabolic and again continuing to rise today. Probably a little bit too rich for me up at these levels. You know, you'd like to see it pull back down to sort of $15. I think that'd be quite a good level to potentially have a look at. One of the things that I do know about this is a lot of people have got on this one a lot earlier. But they are, and any shareholders should have taken up. They've got another business called LIS Energy that is going to be listing as well. So all shareholders should have got access to that and should have taken up some of those shares as well. That's obviously helping, potentially to support the share price. Look, a lot of the technology I don't really understand, and I obviously look to businesses that I understand before I invest in them. So I'd need a little bit more time, but look, I've had a couple of clients do very, very well on this one and continue to hold. So look, it's a hold from me. I think any sort of pullback, then you'd be looking to that, and $15 would be a level where I'd look to jump in. There's been some consolidation around that point. But for me, potentially a little bit rich here at $21.75 where it is today.
Yeah, I was sort of doing a bit of a search as to who management is, if it had any of those big sort of names associated with it that often can send these share prices parabolic. But it's one to watch, an interesting area of the market that it's operating in, but it is not a buy from either of my guests here today. Jun Bei Liu from Tribeca Investment Partners and Adam Dawes from Shaw & Partners. A lot of partners going around today. All right, let's get to stock number 5 on the list, Capral. Or Capral. I'm probably not saying it correctly, but the ticker code is CAA. It's for Aiden, saying it looks potentially perhaps undervalued after delivering strong half-yearly results, talking about net assets looking good, cash in the bank as well, exceeding its current market cap, positive increasing financial metrics across the board. So Aiden asking, am I missing something here? Jun Bei, could it be the price of aluminium?
Yeah, look, it's incredible. I actually never heard of this company. It was just having a look. It's been listed for a very long time, and it's actually just delivered its best result in 20 years. So look, it operates in a very a tough environment, tough industry, and then the demand that just seems to be going its way. It's trading on less than 5 times earnings, and the tailwinds being incredible for this business. So the residential. So at the moment, what's driving its earnings? Residential housing growth. You've got the infrastructure spent by the government, its competition seems to have disappeared as well, and so it has gained a lot of market share. It just seems to be very in a very sweet spot at the moment. Certainly something I would actually spend a bit more time looking into it. The problem with aluminium is that is a cost inflation for this business. So ultimately, this is not the type of business that can pass on the price easily. So that could present a bit more margin pressure further down the track. But right now, the environment seems very strong. The demand is very strong.
So would you say that it's a pretty cheap potential buy for Aiden?
Yeah, look, it's a little bit speculative front. I would say it's cheap, it's speculative, and it's not something you would hold on for a long time. Right now, it's just a little bit too cheap. But 5 times, it looks like a very good buy, but need to do a bit more work on it just to get comfort.
Yep, got it. I get it, Jun Bei. So Adam, are you familiar with the company? I mean, it looks as if it's made an acquisition. It's been successfully integrated into the network, it says. I mean, yeah, when you're reading it at face value, it's hard to sort of see why it's underperforming after that result or since the result. So again, does it come back to the price of input?
Yeah, absolutely. You look at that, and even last night, the price of alumina was up 15% overnight. And we understand that the alumina price is going to print here in Australia, will print $381 a tonne for this week. So that basically adds an inflection off $300 a tonne on the 1st of September. So there's some huge rises going in those input costs. And Jun Bei is absolutely correct that they will struggle to pass that on to the customer, as they make very much everything from windows, security doors, anything to do with aluminium. These guys do it. So I think you got to be a little bit careful of that. We actually saw AWC or Alumina this morning. They were talking about the bauxite and how that is going to affect their sort of cost pressures as well. So it's an interesting one, and I think potentially that cost input pressure is putting a cap on the ability for these guys to continue. So it would be a hold for me, because actually the chart looks really, really good. It looks like it's moving in the right direction, and I'm really, really comfortable with everything that's going on with it. But I'd just be a bit cautious that they will not be able to pass those price increases or pressure onto clients. So that might slow them down a little bit. So it's a hold from me, Nadine.
It's sort of just really indicative of what we've been talking about post-reporting season, those big themes that emerged being cost pressure, labor cost pressure, and the other one, of course, that comes into it is supply chain. It hasn't come up in this conversation yet, but we're still only halfway through the program. So let's see what happens. I'll summarize what came through in that first 30 minutes or so, starting with the stock of the day, which was Santos. So Santos, as you know, has agreed to merge with Oil Search. We got the details about that today. Jun Bei likes Santos, and it's a buy for her. It's done well. And so it's worth a look in. Now, Adam sort of disagrees. He sees Woodside as the one that he would buy in that space. So the stock of the day is not going into the ausbiz portfolio, but that's okay. Let's get to the companies that you've asked our expert guests to speak of. Codan to start. It's a hold for Adam. It is perhaps, in his view, maybe just a little bit of risk reevaluating in terms of the MD potentially leaving the company. Jun Bei says, look, it's done really well. Slower growth, though. It's not expensive, but it is still just a hold from her. Eclipx Group is going in the ausbiz portfolio. It's a buy from both of my expert guests. They see the trends that are in place continuing at least for the next year or so, and it is subject to M&A speculation. All right, Imdex, IMD. Look, the conditions are favorable for this company, but again, it could be challenged by COVID. Adam would just be a bit cautious on this one. And Jun Bei says that actually it's expensive. It's almost tech-like in that it supplies technology solutions to the mining services space. But again, there are some cost pressures coming through in terms of labor. PPK, Adam just doesn't know a lot about or enough about the technology. Some of his clients have done really well, but it is a hold from him. He needs to understand this business better. It's pretty specky, and Jun Bei acknowledges that. But she says, take a look, watch, wait, see how it goes, because it does seem to be doing very well in an interesting area of the market. Capral, we just talked about it, so it's a hold from Adam. It's not a buy from Jun Bei. She needs to do more work on it, but both of them are saying all the metrics look solid. Adam likes the chart. It's just perhaps that the price of aluminium and the input costs and the inability to pass it along to their customers might be impacting the share price for now. I've mentioned this fantasy portfolio that we've been tracking for quite some time here at ausbiz, and it's thanks to our partners at NAB Trade. So if you're just new to the program, the rule of thumb is 2 thumbs up or a buy from both of our guests, and the stock goes into the portfolio. So let's get a check-in on how we've been performing over the week. Down by 1.5% on the month, up though by just about that same amount. Year to date, up 3.6%. But here's the chart of the day. Since its inception, so the 1st of July 2020, the calls portfolio is up around 40%. So we've added a number of stocks lately. Cluey is one of them, PWR Holdings, Resimac, Deterra, PointsBet, and we'll be adding Eclipx to that list. We've also removed some. So they get taken out when it's a sell or, They just, the guests don't agree on where to from here, whether to hold it or not. So we've taken out Rio Tinto, Raise, Energy One, and Appen. And if you'd like to check that out, you can go to ausbiz.co/portfolio. And this is for Frank. He has given us a little bit of color, saying the company seems to be turning around with recent acquisitions providing strong revenue and profit growth. Again, I had to look this one up. I don't know if you guys are more familiar with it, but innovative industrial solutions to the mining, construction, and manufacturing sectors, which includes fluid systems and trade distribution. Now, it was talking up its most recent result. What do you make of the company, Jun Bei?
Actually, I think you should throw it to Adam. They just initiated on this company, didn't you guys?
Yeah,
he will give you all about it.
All right, well then let's take your cue. You should be running the show, Jun Bei. Adam, I missed that. So talk to us about Coventry Group then. Why take it on?
Well, look, there's obviously some good results that is now starting to come through for the company. The company actually just paid its first dividend since 2015. So everyone give a cheer. Since 2015, the shareholders have not received anything. And as of the 29th of September, it's going to go ex-dividend for 3 cents with 100% franking. So that definitely means that there's some positivity coming back into the share price on this one. Look, I don't mind the stock. I like the business. They do a lot of fasteners, steel fasteners, those kinds of things. So look, it's quite a good business. Their results were actually fairly much in line with what we were expecting. So that is quite a good one, but it is quite thinly traded. It is only traded 86,000 shares today. So it is and 51% is owned by sort of, 5% owners or larger institutions. So it doesn't have a lot of free float. So I'd be a little bit cautious about that one. But look, the stock has certainly risen and certainly done well. And I'm going to stay with our Shaw & Partners research, and it's a buy.
Yeah, I'd like to read that research in a little bit more detail. Well, have you read the research, Jun Bei, and would you agree with its conclusion?
I only just saw that's the only research I can find on the Bloomberg. Look, I must say, look, it sounds like the company is turning around, and they can benefit from finally better cash flow and the like. But I would just point out a few things is that, first of all, turnaround is very, very difficult. And, perhaps it's been a long turnaround, but, you do need many results before you can really call it a turnaround, because a lot of time it's just operating environment a bit better. When things are a bit tougher, all the cracks will appear again. So let's put that aside. And secondly, that, the business kind of sits in that industrial services that you supply, whether it's auto parts and supply a lot of those things. Supply chain has been very tough lately, and we touched on before. There's been more disruption just in the last few weeks. Even shipping costs higher, shortage has gone worse, and pretty much there's no end in sight. So a company like this, I would say, would not most likely to be impacted. So be very mindful of what's going to happen over the next 12 months, whether it's costs going higher or just simply can't supply because of lack of shortage. So for me, I'm staying on the sideline. I'll probably watch a bit more before I invest in this company. But look, you just need a bit more evidence of turnaround.
That was a very polite disagreement with Shaw & Partners research. I like it. But we have hit all these main themes, haven't we? Input costs, labor shortages, and there's the supply chain risk. So these are real. I mean, we bang on about them a lot on the channel throughout the day, but it's because they really do have impact and potential future impact on a lot of these companies. And that is my preamble to Monadelphous. MND is the ticker code. This is for Jerry. Engineering Services Group, construction, maintenance, industrial services, to the resources, energy, infrastructure areas. But Adam, Monadelphous has a lot of its business in WA. We just had that massive surplus coming through from good old Western Australia. Things are going quite well there. So is that sort of a counterbalance to some of that potential negativity in this services space?
Yes, is the answer. However, that is probably a short-term sugar hit, and it's obviously done well in WA. But that it is a global pandemic, I guess, and I think COVID has certainly affected Monadelphous, and they've really felt that sting. Here's the word again: labour cost pressures, as the restrictions on WA. Now, obviously, there's not much COVID in WA at the moment, but they still can't get a lot of workers that used to be fly in, fly out, even in Australia, let alone internationally. And so that has really cut their forecasts. And I think Monadelphous' forecast, they missed by around about sort of 5.5%, while those pressures are still going through as well. And we can't really see any lifting of those hard closure borders in the WA area. So I think Monadelphous is sort of caught in between a hard and a rock place at the moment. They are probably the biggest and the best in what they do. And look, they've recently won some contracts worth around 420 million in value, and that has really sort of helped with the they're obviously keeping those contracts moving forward as well. But it's that current high cost environment, and with a lower risk of these contract types versus the traditional fixed price contracts, that means that Monadelphous will continue to struggle. So for me, it would be, I'm going to say hold. I'm closer to a sell on this one, but I'd say a hold because of where that share price is, around that sort of $10.24 today. It is at the bottom end of that range, and looks like there's a fair bit of support there at $10. So I'd be a little bit careful. Any of the mining services business, we are in a super cycle, if you could say, for the commodities, and certainly those commodities, unless you're talking about gold and potentially copper, have all started to come off a fair bit. Uranium's moving in the right direction. Coal is moving in the right direction, but a lot of the other commodities aren't, and these guys will be beheld to what the commodity price is doing. So I'd just be cautious on Monadelphous at the moment.
Is caution what you would employ in terms of the mining services space, or if you're looking to gain exposure to that narrative, is Monadelphous, a safer set of hands?
Yeah, I agree. Monadelphous is absolutely that one that you would look to for, one, its market cap, two, that it's got a fantastic name, and basically all of the large commodity guys use Monadelphous for all of their staff housing. There's lots of things that they use Monadelphous for. So I'd be better prepared in that space to go with the big boys versus the smaller ones. So yes is the answer, but I'd just be cautious because that commodity cycle is waning to the downside.
Got it. Jun Bei, is there a need for an Australian investor to have a company that's leveraged to the mining services? And I know that's a very blanket term, but whether it be oil or gas or some of the hard commodities, is it a sort of key portfolio holding, or are there other ways that you can gain access to that commodity super cycle that are more sound in your view?
Look, it's hard. So there's a few choices. And normally how it works is that when commodity resources company run first, and then you have a very strong resource environment, and then the resource company go and spend, and then the mining services, generally the second wave where share price will run very hard. But right now what we see is that yes, the commodity prices has been high. It's come off a little bit, still been pretty good, and there has been quite more demand on the ground, but not like what we experienced many years ago. So there is some demand for activity. So the demand environment is good, but the problem for those mining services that literally there's no labor shortage, and I just don't know how that will improve, how quickly that will improve. So it's going to be very challenging for those businesses to manage the cost, and even to supply to those demands. At the same time, as Adam touched on, a lot of those mining commodity prices coming off. So it is just becoming much more challenging for this business. It is a good company. It's a good quality company. It's just that the operating environment, they're not really benefiting from anything, because sort of tailwind offset with the headwind of the cost front. At the moment, what investors are doing, trying to gain exposure to the mining services space, is through the company with technology exposure, like the Imdex, like the Codan, like some of those names, to sort of gain exposure rather than hard people, more people intensive type of space. So yeah, so this is what's happening. But then, you know, the share price, what you pay is very different. Imdex at 20 money, so Monadelphous are much cheaper multiple. So in my views, the earning doesn't look too exciting. I don't feel the need to be there. I know it's trading at the lower end of what it is, and normally share price will have a bit of run. So say government step up in infrastructure spend, because this company will benefit if we have the cost headwind start to alleviate. So it's just a very tough case for this company. I would avoid it at the moment.
We're avoiding Monadelphous. Now, I feel, Jun Bei, like you may be short and sweet for the next company that's on our list. This is for Scott, RXL. I shouldn't put words in your mouth regardless. What do you think of Rox Resources? It's an explorer in the gold space is what I believe. And Scott points out that, look, the share price seems to keep going down, but news mentions positive mine developments. Is that sort of the key word to you? Is that it's still, you know, so long before commercialization would happen?
Yeah, you know me well, Nadine. I certainly feel this is way too early. You play with the big boys. You invest with the more reputable and larger gold miners if you wanting to gain exposure to that front. Though gold prices have really struggled in the last 6 to 12 months, 6 months or so, be mindful that gold exploration is very costly, and many companies go through a lot of cost blowout and issues. So you really want to stay with the larger companies who has lower cost per ounce to generate good cash flow. Otherwise, it's you just won't see any returns coming out of those businesses. I would avoid this one.
Avoiding Rox Resources from Tribeca Investment Partners. Adam, little specky company, I mean, could have huge potential. So is it the gold price that's weighing on the share price? To answer Scott's question, in your view, can you put a bit of money in just a couple of these explorers, or again, would you stick with the Northern Stars of the world?
Yes is the answer. I think you want to be in businesses that have the ability to keep that market moving, as well as the ability for them to produce an ounce of gold at sort of lower cost prices. And obviously Newcrest is one of the better companies that is able to do that with all sustaining costs, I think just under $1,000 an ounce. So that is very, very good. I can't see how much it costs for these guys to get it out of the ground. I'm still trying to find that. But basically, you just look at the share price, and that sort of tells you a lot about what this company's going through. And basically, you can see that consistent selling that is going on at the moment will continue to, going back even further, this stock is looking a very, very short, sharp, and basically, I wouldn't be too keen to get there. So if we started to see a little bit of a tick up in the share price, and potentially then the management came out and sort of gave us some really good areas of some of their projects and things like that. I know that they have started to increase their holding in some of their resources in some of their mines, and they've demerged a couple of their nickel assets to Rox Resources, as well as from Rox Resources to a couple of other businesses. So for me, this one it isn't getting me excited at all. I'd stay in the big end of town. Northern Star and Newcrest are my two top picks in the gold space at the moment.
Got it. Adam, thank you. All right, let's get on to WAM Global, WGB. This is for Benji. So this is a lick. So let's take all that into consideration. It's pretty, it's fairly new, but it does give investors exposure to some of the global names, and it recently looked as if it's going to be taking on a portfolio from Templeton Global, so the Templeton Global Growth Fund. So that means that it's getting bigger. Correct me if I'm wrong. So is it a way, Adam, for investors to get easy access to some of these global companies, or is there a better way to do it?
Well, look, absolutely. I mean, it's the tussle now between the LICs and the ETFs, really, as far as, getting access to sort of global funds. One of the things that you'd look to with this LIC is that these guys are very nimble, or in fact, it's not index based. So you want an active manager. Now, we've seen the recovery from COVID. March 2020 was the bottom of global markets, or bottom of our market at least, and further global markets. And we've seen a fantastic recovery in global markets as well as the Australian market. But what I would like to do now is that I think the easy money has definitely been made from the global side of things. And then where you were invested in an index or an ETF that is an index, now is the time potentially to look at moving some of that index money out into a global asset manager that is able to be active. And basically that means that for that, they are going to be able to be a lot more nimble. If the index starts to fall or in fact starts to grow again, they should be able to beat the index. And I think that's is exactly what we want to see. So I think that overall, WAM Global is a well-run business. Wilson Asset Management have some very good, stable businesses as well as funds. The one I'm really looking at, though, is Magellan, MFG, and that has really come off the boil from sort of 55, even higher, to sort of $40 today. That, I think, is potentially looking to be more of value for an active manager in the international space. WAM Global, I think, are very, very good. I think the girl that's running it she's quite reputable in the market. Is very reputable in the market. But my better pick at the moment on price action would be MFG, Magellan Global. Magellan Financial Group, not the Global Fund, the Magellan Financial Group. So for me, this one, I'm okay. It's a hold. I'm not going to go out and buy it. I think there's better value in Magellan.
Katrina Burns is the lead PM of WAM Global.
There you go.
Adam, just a PS to that, do you know why? I mean, I noticed that Magellan was coming under pressure today. There's no news that I can see. Do you know why it's coming under pressure? Or is it just a reflection of global markets?
Yeah, global markets, but also there's been a fair bit of pressure on the outflow of funds under management or advice under funds under management. And plus that Barrenjoey acquisition is getting the market a little bit skittish at the moment with the amount of losses that they're going to take. So I think it's a bit of a reweighting or repositioning of the portfolio. There will be a time to come back into that one, and it just looks really good. I mean, these guys should do well. I know Jun Bei can't really talk about other asset managers because she doesn't do that. But so I think Magellan is looking better and better every day.
All right, let's just get a quick view for Benji from Jun Bei on WAM Global from you, Jun.
Now, of course, I can talk about other fund managers. I am very,
will it be good, though?
Unbiased.
Will it be good?
Wait till I have my list of my list of products, and I'll talk more about it. Look, I think I'm a hold with Adam, and just on Magellan. This morning it's down a lot because it's Jada initiated with a sell with an underweight. Just on the outflow. Yeah, so Jada, the stockbroker. And I think recently there's been a lot of downgrading recommendations, mainly because the performance has been quite poor. So now they're down 19% relative to the bench for their core global fund. The main problem is that they're not sticking to the stock picking, right? They started taking very bearish view of where the market's going, maybe 10 months ago, and then just skewed to more cash and then sort of stepped away from their core strength with stock picking. So that just affects them quite a lot. And I do hope they can pick up the performance, and then you can see the flow coming through. Normally there's a 6-month lag, but Magellan certainly has come off. I do like one fund manager. I do like Pinnacle. It's done incredibly well, and I think in the near term, its flow is going to look enormous. And at the same time, there's M&A opportunity out there as well. There's been a few rumored things coming out of whether it's coming out of Fidante coming out of Challenger, and there's a few other global side of things that they can buy. So that business is more diversified, exposure to lots of fund managers, not just growth or value. They're quite balanced, and also run by a team that has just incredible execution, track records. I think that's definitely a buy.
Got it. Thank you. So that's a bonus buy coming from Jun Bei, Pinnacle. Let's get to Servcorp. So Servcorp is co-working spaces, virtual offices, et cetera, et cetera. It's been a pretty challenging environment for Servcorp as COVID has really hit, but cost controls at the company, we're getting vaccinated. Could there be better days ahead for Servcorp? This one is for Sarah. And I'm going to throw out there, could this be an under talked about reopening company? I mean, everybody's talking about Qantas. Everybody's talking about Flight Centre, you know, some of those real typical names. But could this be a company that Jun Bei stands to benefit as we, well, hopefully get back to normal?
Absolutely. Absolutely. Sorry, I jumped out too excited. One is the office space will definitely be on the way back, and Servcorp is very leveraged to the initial reopening when people step back into the office. Maybe some time away because big businesses will still tipping people back, but a lot of short-term leases where they lease out to generally pick up very quickly. And I know for a fact that in the market, a lot of those short-term leases sort of window has now been shrunk because they actually is making so much money, from just from leasing out the short spots because the demand is actually picking up. So I think it does, for the cyclical side, will benefit when the economy reopen, and it's very leveraged to that. But now the only thing is though, I do feel Servcorp perhaps. There's more competition now in our markets. You're seeing a lot of new international players has come into that sort of short-term lease workspace. I think that they need to invest more. Once the demand does come back, they need to invest to refurbish and also to rework some of their office space to, what the workplace might look like in the future. For certainly some of their competitors has done, has presented some very modern working environment, collaborative environments where Servcorp's probably is a little bit behind.
Okay, so that is not a buy, but would you be holding it?
Oh, I will be holding it.
Okay.
I probably wouldn't buy this one.
Yeah. Okay, got it. Adam, what do you think about Servcorp, SRV for Sarah? I mean, yeah, there's plenty of challenges out there. Do you see things improving?
No, is the answer, and I'd probably be a sell on this one. I don't see that anything that, even in their latest result, net profit after tax of sort of 28 mil, wasn't, setting the world on fire at all. So they have had to do some impairments on some of their leasehold properties. As Jun Bei said, that they're continuing to get more and more pressure from these global guys or global online offices, WeWork and things like that, that is pushing through. It's just not a space that I'm that interested in, because basically who needs an office when you've got one right here at home? And I can pretty much do everything I can, or I'm doing everything that I need to, being at home. So the only thing that is a bright spot in that is that, potentially you might need a meeting room once every 3 months and you can go around Australia and you can use their offices anywhere in the world, I guess, to do that. But yeah, I think a lot more people now are very much attuned to working from home, and hence that business is not defunct, but it is going to suffer, I think, over the next coming couple of years. So it'd be a sell from me.
Well, I've got to say, guys, I'm looking forward to sitting here in the studio with you both in person.
I agree. I can't wait.
Yeah, it'll be good. And I do admire you putting on a shirt and jacket, I presume, for us on a Friday afternoon, Adam, even at home. Thank you.
I actually shaved for you, Nadine, as well. I actually shaved, so,
Yeah, there you go. We thank you. Listen, we thank you, Jun Bei Liu from Tribeca Investment Partners, for all of your insights and rolling with the punches. And we thank your children as well for not downloading while we're on air with you. And Adam Dawes, thanks for joining us from your home office. We appreciate it. Have a good weekend, guys.
No problem. Thank you.
You too. Thank you. Bye.
All right, I'll just quickly sum it up. I know I don't need to go on about it because we've just listened to it, but Capral was a hold from Adam. It was. Look, very specky. Jun Bei's not ready to call it a buy, but she says, look, it's an interesting company. Coventry Group, I think, is where we started this half hour. It is an avoid for Jun Bei. Turnaround stories are difficult, she said, so keep that in mind. It's a buy, though, from Adam. He's at Shaw & Partners. They've released research on it. You might want to try to dig that up in some way, shape, or form. It's an avoid for Monadelphous from Jun Bei. And look, Adam says it's just caught between a bit of a rock and a hard place. It is a quality company, but it's only a hold for him. It's an avoid for Rox Resources, an avoid for Rox Resources from Adam Dawes as well. Stick with the big boys if you want to get exposure to the commodities story. WAM Global, look, it's a hold for Jun Bei. PNE, though, is a buy. Magellan is what Adam would be looking for in that funds management, global funds management space. Servcorp is a sell for Adam. It's a hold for Jun Bei. And that brings us to the end of this Friday program. It's been wonderful to have you along. Don't go anywhere. We will cover more on the markets in just a tick. And if you want us to cover a company for you, you just have to email us at the number that's on your screen. Now, we love talking about crypto. We will be doing that with Ian Love from Blockchain Assets, talking about the latest opportunities in that space. Plus, Gemma Dale from NabTrade gets us across what's been moving the markets this week. Stay with us.